So this is weekly commentary 50, and this is what we have been waiting for since, I believe, November, right? We had our eyes on this fair value gap, and now we've traded into it, into the fair value gap, and now we've found displacement away. Now, I want you guys to consider this, and it's very simple. If you're up to date with chapter 6, lesson 2, you'll understand the use of the monthly time frame. From here, right? Let me just check the date. It's currently the 4th of February. Where do you think this monthly candle is likely to expand towards? We took the low of the previous month's candle inside of a fair value gap relatively early. Where do you think the rest of the expansion of this candle is likely to be towards? To the next candle's high, right? The most logical, you know, take I'd have on this is that we're going to target this buy side liquidity above this candle's high, right? Now, what's that going to translate to into the weekly chart is going to be bullish weeks, sorry, because on a bullish monthly candle, just like in a bullish day, we're only trying to filter out the bullish setups. In a bullish month, you're trying to sieve out the bullish weeks, right? Now, I want you guys to consider this, right? This was the monthly fair value gap we traded into. This is a bearish fair value gap. Now, what I want to see is this. Displace through this fair value gap. This is a bearish fair value gap. Now, if we displace through this is, quite a confirmed market structure shift for me. On the daily time frame, this is already a market structure shift, right? We'll go into the daily time frame after this. But if we disrespect a weekly bearish fair value gap as well, and we displace through that, it shows that the algorithm is seeking, a buy profile. It's disrespecting a bearish PD arrays, the discount PD arrays, premium ones, sorry, and is now attacking and going for buy side liquidity pools, right? Now, if we go to the daily chart, this is the type of breakers we look for, right? Low, high, lower low into a level of sell side liquidity pool or a discount, and then high, high. You see this displacement, right? You see the displacement here. Look at this big candle, the imbalance is creating to break the high. This is what we want away from this area. This shows the intention of repricing. This is all you're trying to do on the higher time frame, guys. Where are we likely to reprice? Look at how you displace away from areas after running a level of liquidity or after rejecting off of a PD array. The displacement shows the intent to reprice. Now, where are you trying to reprice from after running liquidity or rejecting off a PD array? And then you're just trying to go to where is it likely to trade to next. Now, we have this weekly, fair value gap, and there's also this inefficient area here. Now, why is this an inefficient area here? You see the volume imbalance between the candles here, and you see these two candles. Forget they exist. Forget the gap is from. Try and see the gap like this, from this candle to this candle. Forget these two candles, and I'll tell you why. On the chart, we have time and price. Now, these small candles with essentially no body in the candle is showing time and moving. Given the market is open, the market has to print a candle. Now, the candle is showing two things. A graph, any chart, any mathematical or statistical graph is showing the relationship between two, variables. This one being time and price. Now, this isn't showing price being delivered. It's showing time moving in the market. See this as a gap in price. We want to see, a candle, trade through this area relatively strongly. I don't want to see us wick into the area. I want to see us a bodied candle through that area. Now, given Monday's trading, right? Monday's going to open and make a new daily candle. We'll have an imbalance, a fair value gap from this candle's high to whatever Monday's candle's low is on the DXY. You have your breaker block, right? The up candle, and you have your bearish order block, your bullish order block here, and you'll have a level of fair value gap here. So you have your fair value gap and you have a block to pair any retracement to go long again, right? Now, for Euro, I believe a few weekly commentaries ago, I told you guys to mark out this liquidity pool. You see how flat these highs are, right? You see these wicks, how flat they are. If you go on a lower time frame, that's going to be a very, very equal, relatively equal highs. It's going to be, a 1, 2, 3, 4, a quadruple high. And retail firm at the mouth for that type of stuff. They see that as a solid area for price to hold and reject off of. And what builds up there? The longer that high was in the market, the more buy stops rest above there. Now look at the price action and the order flow before that point, right? Let's look here. You had accumulation, manipulation, and distribution. Now we didn't go back into the premium of this range, and we that fair value gap was left open. Now if I just let me just put a horizontal ray on the closure of that fair value gap. You see how we traded up above buy side liquidity, that's offset distribution, right? Smart money short positions paired with retail buy stops, rebalance this area, and you see that displacement. This is the key that you want. You see the breaker. You want the breaker to form in logical areas. You have to find your breakers at institutional reference points, right? Running buy side liquidity or sell side liquidity, or running the higher high for a bearish breaker. You want to see sweep liquidity or into some level of premium. Likewise, for the DXY, we saw a bullish breaker and the lower low sweeping, sell stops and into a weekly fair value gap. This is what you're looking for. Now, likewise, how we said for the DXY, Monday's candle's going to open, right? Monday's candle's going to open for the euro. It's going to make a high and it's going to leave a fair value gap from this candle's low to whatever the high is for, Monday's candle. You have your bullish order block, 1, 2, 3 candles, and you have your breaker, right? Rejection block as well. And you're going to see us travel down into the discount, right? Mark this fair value gap as well on the daily from here to here. And you're working your way down now. I'm favoring shorts on euro and longs on the dollar from here. The next weekly candle for the DXY, I'm expecting to be bullish, and the next weekly candle for euro is I'm likely to be bearish. Now, in saying that, I get a lot of questions about Chapter 6, Lesson 2, and let me just break it down here for you guys. It's more simple. It all starts with weekly profiling. There is going to be 50 weekly commentaries in this mentorship now. We've done it 50 times. And the guys that are watching this, given that you're new, I want you guys to go and watch the weekly commentaries in order. And I want you to, every single time I say the next weekly candle to move higher or lower, I want you guys to see the accuracy of it, right? Because this is the key and this is how you find consistency. If you can find consistency in the higher time frames, your lower time frame becomes a lot easier, right? Understand the repricing of the higher time frames, right? So we're here, right? Now, where's the market like to reprice to? I'm looking at a sell side liquidity pool, right? You have a bearish market structure shift, right? You can look back 60 days. If we look back 60 days, right, from the first calendar month, I believe it's 61 days, yeah. Sell side liquidity pool to work to here, sell side liquidity pool to work to here. You have a bias now and a drawn liquidity to work on. This is the repricing. Now you're looking for the daily chart to offer you short setups and continuations to this sell side liquidity pool, right? This is where your open, high, low, close formations and things come in. So let's say Monday creates a fair value gap and Tuesday, trades up into it and rejects. You can expect Wednesday, Thursday, Friday, and I believe on Friday there's a USD news, there's a consumer sentiment, and there's also GDP for GBP on the Thursday. Those are the only two significant red folders for, euro, pound, or the dollar for this week. The Monday, Tuesday, and Wednesday is pretty smooth, right? This is how you do it. Your higher time frame. Where is the next likely draw to be on your weekly? Then go into your weekly profiling, right? Then every single day, this is what you do. You have your weekly profile, like how I'm saying my weekly expansion for euro is likely to favor the downside. How is that week likely to play out, right? Well, during the data collection from chapter 3, lesson 2, we know that the high of the week likely to be placed in the Monday and the Tuesday, and then the expansion for the remainder of the week. We have the catalyst on Friday, and Thursday that GDP will also spill into the DXY, right? This is how you do it. Now, then you go in every single day on the daily time frame and you say, is the next candle likely to go higher or lower? I say let Monday pass because Monday is gonna allow you to build the range. Monday could create the fair value gap, right? Let's say Monday creates a high around here. You'll have a fair value gap from here to here. Tuesday can then institutional order flow trade up into the fair value gap and reject. Then you have your bias for Wednesday, Thursday, Friday. You can go and attack this fair value gap and work your way down to this daily um, imbalance. Do you see how that's how you do it? The only thing that's stopping you from doing that perhaps is patience. right? You can find a plethora, many tens of setups, right? If you just wait for simple and very clear environments to trade in like this, right? You see how now the candles, look at the candles, the bodies, look at the size of the daily ranges. Look at the daily ranges now. This is liquidity coming back into the Forex market, right? Consider, if your guys are taking fundeds and you're at a point where you can afford them and you're ready, this is the type of environment that you're looking to trade to, right? You have a clear drawn liquidity, you have a clear daily time frame, clear weekly time frame. This is the time, right? When opportunity knocks on your door, open it and don't let opportunity walk away. How many times you knock on the door, you don't get an answer and you walk away? Same thing with opportunity. Now, I want to take you guys through what we were doing on, if you guys have me on Snapchat, I'm not too sure. There's a lot of older guys here that maybe are they don't use social medias like that. Let's talk about FOMC. There's a few things that we have to consider before. Let's look at Wednesday's candle first for the DXY. This is Wednesday. You see, Wednesday's opening was here. We can expect an open, high, low close delivery for Wednesday. And we still have our draw on the fair value gap. And this is everything that we're working towards. So if I'm expecting the daily expansion to be lower into the fair value gap for the dollar, my bias for euro is long, right? Now, in saying that it's long, before FOMC delivered, we only had, you know, we haven't hit the buy side target yet. You see how it's pretty much just making a trend line above. Now, getting close to FOMC, right? Where I'm expecting FOMC to punch the upside. Now, the reason why you don't trade it, and a lot of you guys say, but Omar, you knew the direction for it. Look at these candles, right? This is what I was working off. And in the Telegram GC, perhaps you saw it. I'd said, mark out this fair value gap, right? Mark out this fair value gap. And you also have this mitigation block to work with, right? You have a low, high, higher low, higher high. This is your bullish mitigation block, right? Now, when I saw this candle move away from it, I'm favoring, and if you go on a 5 minute time frame, after this candle, right, this displacement, right, my eyes are going to this high, and I'm looking at what I was looking at 1.093, and the reason is this, right? If we go to the daily time frame, the high here, right, this was the buy side liquidity pool working towards is 1.093, right, essentially the previous week's high. Now, if we go back to the 15-minute time frame, the reason you don't trade FOMC is this. When FOMC comes in, you see how it took out this short-term low and it wicks. You can't do anything about that. If you even know the direction, I knew the direction was higher, right? I was favoring higher, a lot. I wasn't seeing any potential downside purely because that DXY fair value gap was the draw, right? What are you gonna do when it wicks the other way before it goes to the intended direction? You're gonna trade without stop loss. What about if that move was deep? It could have been very deep, right? Now FOMC, let's go to this. This is Wednesday, right? 7 and 7:30. Now this is the candle of FOMC. And on Snapchat, I said you want to wait to the third candle. Now this is the reason being FOMC is the actual fund rate, right? This day, not the FOMC where they just speak, right? The meeting. This fund rate, FOMC, is usually a two-part event. On the two-part event, you have 7 p.m. and you have 7:30. Most times than not, and you can backtest this on the actual FOMC releases, where there's the fund rate, then the conference where Powell speaks. It's a two-part Judah swing, power three essentially, accumulation, manipulation, distribution, right? You see this fair value gap. Now with fair value gaps, we don't really care about the wicks. We care more so about the bodies respecting the fair value gap. And it was very specifically said, right, in the Snapchat story. You want to see the candles respect this fair value gap. and you want to see the third candle trade higher. The third candle, right? The third candle from here, and this was the buy side liquidity pool here, and 101.093 was just here. When I saw this candle, and it was just, it's reinforcing support resistance theories here. Yeah, it ran it shallowly, but support resistance theorists, they still say, this is still a level of resistance. It's not really a strong run through it. They'll still take this as just this is the added high, right? So a triple high now. The next event is 7:30. Take this as a Judah swing, and this is the actual move. You see how I'm using time and then the price. Because I know in two 15-minute candles, right? So the third 15-minute candle, I know what that's going to be. That's going to be the start of the conference. And that's going to be the intended move, most likely than not. Now, you can apply the same thing into your normal everyday trading. If it's 1:30, right? If it's 1:30, sorry, if it's 1 p.m. UK time and there's a 1:30 USD news event, which is 8:30 a.m. on Forex Factory, you have, right? You have you have six 5-minute candles, and you have two 15-minute candles toward that news event. So look at the candles and where they're trading into. Let's say you had a fair value gap. 115 candle comes in and rebalances it. The 130 candle, and take a note on this, the 130 candle, the candle with the news is always going to sweep, right? 95% of the time, it is going to sweep the previous candle's low or high, even if it's rebalanced, right? Let's say it rebalanced a fair value gap and the next candle open was the news. You still want to see the sweep on that candle's low, even if it's rebalanced, and then it's going to shoot off. This is how I was able to see that move for FOMC. It's all about time, right? Look at where price is right now. And now I'm going to add in another factor. Where is price right now? Where did it come from? Where is it likely to go? When? Yeah, the time. What time could it do it? The time. This isn't this candle counting nonsense that you see from that guy on Twitter. I don't know if you're familiar with. There's a guy that says he counts the candles and he knows every high and low. I'm not counting the candles. I'm counting the time. It's not just because it's a third 15-minute candle. I could have said, look at um, the 30th candle, the 1 minute. I'm counting the time on the Forex Factory calendar. That's the key. Now you can apply this to a lot of things in you know, your 8:30 a.m. protractions for New York session, right? You're blending when time kicks in with where is it gonna rebalance? Where is it gonna retrace to for a continuation move? That's essentially how I done it, and that's how I do it for a lot of news events. I look at the news event, I look at how many candles there are. There's a fair value gap here. I retrace down into that fair value gap just before the news event. Most likely, I'm gonna trade away from it, but expect that news candle to sweep, still have a little sweep to it. That's why it's better to wait, sometime after high impact news like your CPIs, your PPIs, and those type of things, right? Now, I think that's covered this weekly commentary. If you go back to the weekly, monthly for the euro. We also had a sweep of this previous month's high, right? Now we have this from here to here, liquidity void, right? This candle didn't come into it at all, it just shot up higher. We can work towards there. We could have a very long-term bias going into from here now. Now, the context behind the fundamentals is this. Powell and the Federal Reserve essentially they didn't want to raise the interest rates because they weren't believing in a recession because the last string for them essentially was the labor market is strong. The labor market is strong. It's very good. The numbers are quite good, but the labor market on the NFP it was lower than what they expected. Now, what does that show? It shows that, they were wrong and they're kind of in a checkmate position. What did they do here, right? Now, remember, before they announce if they're going to be in a recession or they need to hike the rates faster than what they were hoping to do, the market's going to deliver it way before they announce it. And the reason being is this. The price is always going to move faster than the matter of what they announce. It's always like that. You can check it yourself. Look at all the Brexit and whatnot. You can see that price moved way after the fact of the actual announcement by the politicians. The reason is this: when the politicians announce it, retail get in. Now they're not going to let retail get in before the pricing. They're gonna let's say they announce a recession and and dollar was here. People will get long on the dollar being a safe haven and stuff like that. But it's already up here, and people retail they just buy off, stupid news articles and whatnot. Then that retracement comes and it squeezes their position just for continuation higher. This is how they run the train on retail, right? This is how they literally run laps around them. And it's because of this, they have these news events and they know that retail buy off news events. They know that institutions, large ones, the retail institutions, right? Retail institutions like JP Morgan, they're not smart money, right? They're using, they're using, news, they're using fundamentals to back their analysis. Price is always going to outpace whenever the matter of the news event is released. So always consider that. Now I'm looking for this volume imbalance as well on the monthly time frame. Um, for the S&P, it's still a bit unclear to me. It's a lot of chop. If you go down to the weekly, we still have this volume imbalance we could tag into. I'd rather sit on my hands. I'd recommend you guys focus on the forex pairs for now. So just to, conclude this weekly commentary, next weekly candle, looking to go higher, looking to disrespect this fair value gap, right? This fair value gap. Now, if you do disrespect that, keep that out as a flipped support resistance, right? That's gonna act as a level of support given that we displace through that. Old fair value gaps become new fair value gaps. Just make a note of that. Euro, clear downside targets, this weekly fair value gap. I'd favor euro over pound. Now, this is a market structure shift. Forget the wicks. Look at the bodies running into the wicks and the displacement, right? This is a market structure shift as well. Fair value gap from this candle's, high, which is also the close, and this candle's low. You have that target to work towards for pound and euro as well. So consider if you're going to take funders. Now, this isn't me giving you guys financial advice. This is me telling you there's opportunity right now to capitalize on. Consider it. Now, in saying taking a funded, that doesn't mean go take the biggest funded. You go and take the one that you can afford because you do not want to enter that challenge automatically in a psychological drawdown, right? Maybe not your account balance won't be on a drawdown, but you might be, emotionally not ready for such a large size account. Take the one that you can afford, and if you're not gonna have a problem or sweat trading it, given the larger position sizes on a 100k account, 200k account, right? So that's the advice I'd give to the guys considering that. Now, I want you guys to do this every single day. You see how I do a weekly commentary every single day? I do one for myself where I don't record it. I just look at the chart. I do one every single day for the daily time frame, right? I look at the weekly candle. Now, expecting, I do the weekly stuff with you guys here on the weekly commentary because it's a promise I make to you guys every single week. But for the daily, you also do it. Is the next daily candle going to push higher or lower? And why? Right? If you can get good at the anticipation of the higher time frame candles, the rest is you executing the move of where this candle is and where the next likely candles to expand to. The next likely weekly candle expansion is going to be to this fair value gap. Price is here right now. Then I'm just looking for next week to take short positions till this PDRA is met. That's it. Now, when it's not clear, wait till it's clear. You see how clear it is now? You see how if you sat out the majority of this week, you could have, saved your account to trade the move lower to there. Those are the things to consider. This is where development comes in. Your patience, conquering greed, and conquering fear. This is the things you guys need to consider. I got asked also to touch on the crypto market. We didn't have a kick with the NFP and the FOMC. I'm still, bearish on cryptocurrency. I don't expect us to be, bullish and seek new all-time highs and whatnot, just because of the narrative of the dollar. Um, but yeah, that's going to be it for this weekly commentary. Any questions, always ask, and I'm going to look into making some templates for you guys as well. Currently, right now, I'm outside of the UK, so it's a bit difficult for me. I don't have my usual setup to work. It's just out of my comfort zone, but I'll still try and get it done. I'm also with a few friends. When they go, it's going to be a lot easier. I'll have, the peace of mind of, them not interrupting my work and stuff like that. They're going this week, at the end of this week, so then I can get started on that. It's essentially going to be templates of your pattern recognition on a day-to-day, intraday, your midnight price, protraction, CBD or standard deviations, runs on highs and lows, those type of things, just to help you guys. You can have them, study them, try and replicate them in your own backtesting, backtest the same things, because that's what's going to help you intraday. right? So until next time, and I'll see you guys in the next one.